Hey everybody, it's Jennifer. Live again. It is Wednesday. Wow, the week is flying by. It is flying by. It is Wednesday, a little afternoon. Sorry, I'm late. Once again, having technical issues. So let's see. We have so much to talk about today. Today's Wednesday. Monday, we talked about step one to finding positive cash flow in your business, which was establishing your sales goals, and not just sales goals for the month or sales goals for the year, but I mean sales goals by the day, by the week, by the month. Critically important in order to drive the traffic you need to your business in order to hit those sales goals. And if you try to do it just by even the week or the month, it's much more difficult. Step number two was understanding the difference between cost of sales and cost of purchases, which gives you your true cash margin and not just your gross margin. And again, critically important if you really want to understand cash flow, and why your bank balance may not reflect what your accountant is telling you your profit looks like. So today we're on to step three. If you're here with me, please say hello, so I do not feel like I am speaking to an empty room. You may have to give StreamYard permission for me to see your name, but it's not critical because I will see it in the group in the end anyway. So please do say hi. Let me know you're here with me. I know that this is a crazy time of year for especially all my toy store fans, and I appreciate you being here with me. And if you watch this on the replay, let me know that you watched it on the replay. So step three is going to be to properly identify your true expenses. So we've come up with this cash margin now. And now we have to understand what all our expenses are going to be, cash expenses. What are we going to take out of our pocket between now and the end of the year in terms of cash to pay our expenses? So of course, you have all the obvious ones, right? Your payroll taxes, your rent, your utilities, all your marketing costs, your credit card charges, which are going to be a percentage of expenses. So you've got all the obvious expenses, but there are some hidden expenses that we don't think about as expenses, which I call balance sheet expenses. And this is the cash that you're going to take out of your pocket to pay for any old credit card balances, perhaps, or to pay on your loans, or to pay back a relative, or anything like that that's not going to show up on your profit and loss statement, but it is a true cash expenditure, needs to be identified as an expense and subtracted from your cash margin so that you can get to that bottom line. What is my cash balance going to look like at the end of the year? So this is the third critical piece to understanding why your accountant might tell you you have a profit, but you have no money in the bank. And oftentimes, I find the biggest culprit is the payments on old debt, i.e., old credit card balances that don't look like an expense on our books, but truly are a cash expenditure. And you have to calculate that. You have to consider that in the mix. It sounds logical when we talk about it, but it really is critical to understanding it. And it is the piece that I find that most people miss. So this is short and sweet, but very, very, excuse me. Thank you. very important that everybody understand that piece of it. So I won't take any more time today. I know you're all busy, but that's step 3. Put it all together and you will have a better sense of what your cash balance is going to look like at the end of this year. So thank you again for joining me short and sweet today. Watch for my emails that will help you put all this together. If you're not on my email list, shoot me a message and I would be happy to add you to my email list. And I will see you again tomorrow. Thank you and have a wonderful day.